Right now, gold is not acting like gold. We have fresh U.S. Iran strikes, geopolitical fear flooding the headlines, and the metal just collapsed nearly 2%. That is a danger signal. The market is telling you something that the news hasn't caught up with yet, and if you're long here, you're standing in front of a freight train. There is one danger zone and one hidden opportunity right now. I'll show you both. The 4014 level is the trapdoor. It's where the real pain or the real profit will be made in the next 24 hours. Stay to the end. I'm giving you 2 scalp plays and 1 swing trade you can execute today. I'll even show you the liquidity grab that's about to wreck breakout sellers. But first, write down 4014. If we lose that on a 4-hour candle close, the whole structure resets and we are talking 3-digit gold. Here is the instant market verdict. Gold is in a strong sell across every time frame that matters. Weekly strong sell, daily strong sell, 4-hour strong sell, 1-hour strong sell. The monthly is still buy, but that's a relic from the rally that just cracked. My session bias is fading. Fade every bounce until 4047 is reclaimed. We are trending down with an ADX reading of 39.5. That is a number that says the trend has bite. This isn't a drift, it's a liquidation. The single invalidation level that flips the bias is 4081. A daily close above 4081 and I'll stop shorting. Write that down. If we break 4081, the entire bearish sequence is in question. But right now, the herd is still trying to buy the dip. You can see it in the oversold RSI at 34, the stochastic at 23, Williams are deep at -86. Every retail oscillator is screaming bounce, and that's exactly why the real money is selling into that hope. The consensus longs from last week are trapped, and their stops are sitting below 4014. That's the fuel. Let's walk the chart from the top. On the weekly, gold has just carved a massive bearish engulfing candle. We were above 4,200 2 weeks ago. Look at the moving averages. The weekly 20 MA is around 41.93, the 50 MA up at 43.88, and the 100 MA at 44.71. Price just knifed through the 200-week MA near 4,346 as if it wasn't there. That's institutional repositioning. They're not buying this dip, they're dumping into the geopolitical headlines. The MACD on the weekly is deep in negative territory, -116 and accelerating. There is no hidden positive divergence. Momentum is aligned to the downside, and the weekly trend is strong sell. If you only look at the monthly, you see a buy trend, but that's a laggard. When the weeklies and dailies align like this, the monthly will eventually crack or we get a vicious snap, but you don't bet on that snap until structure says so. Drop to the daily. Daily strong sell, price sitting at 4,016 after slicing through pivot 4066, and now that pivot is resistance. Our key levels. Support 1 was 4,047, gone. Support 2 4,033, gone. Support 3 4014 is being tested right now. The daily ATR is 96 points, meaning an average day can stretch almost $100. So a move from 4066 to 4014 is entirely within 1-day range, and we are already there. The RSI on the daily is 34, not yet deeply oversold on this time frame, so there's room to fall further. The MACD histogram is still printing lower lows. There is no bullish crossover. The 20-day MA sits all the way up at 41.93, and the 50-day is at 43.88. That's a huge gap, telling you this sell-off is accelerating and there is no mean reversion magnet nearby. The 200-day MA is at 4,346, way above. This is a full-blown trend breakdown. Here's what most traders miss. They see gold near 4014 and they see oversold stochastic on the 4-hour and 1-hour, and they think it's a buying opportunity. But in a strong trend, oversold can stay oversold for days. The CCI on the 4-hour is -100. That's extreme, yes, but it's a momentum confirmation, not a reversal signal. When real yields spike, gold's oversold bounces are traps. The 1-hour chart shows price testing the lower Bollinger Band, but the MA5 and MA10 are sloping down like a cliff. MA5 is 40.59, MA10 is 40.97, and price is a full $40 below the MA5. That is a fast, disorderly decline, and it means any bounce will face a wall of sellers at those short-term averages. The hidden divergence is actually a bearish continuation. On the 4-hour, price made a lower low, but the RSI didn't make a new low on the last swing? No, here both are making lower lows, so it's synchronous. That means no reversal signal. The only divergence is between the news, geopolitical, and price action, risk off but yields up. That's the real hidden divergence. Gold should be rallying on war, but it's not, because the bond market is pricing a hawkish Fed response to oil-driven inflation. That's the institutional shift. When gold ignores bombs and tanks, you listen. The fundamental driver is exactly that. In the last 24 hours, fresh U.S. Iran strikes grabbed headlines, but gold declined nearly 2% because rate jitters resurfaced. The thinking is simple. Military escalation spikes energy prices, that feeds into CPI, and that forces the Fed to stay restrictive. Real yields spike, the dollar catches a bid, and gold, despite being a safe haven, gets hammered by opportunity cost. We've seen this pattern before. The 10-year real yield is the fear architect here. If it continues climbing, gold's 2026 rally doesn't just crack, it shatters. For the next 1 to 2 weeks, my directional lean is short gold, targeting the 3,950 zone, which is a major structural support from earlier this year. The event that invalidates this lean is a sharp reversal in real yields driven by an emergency FOMC or a sudden de-escalation that tanks the dollar. But the dollar index is coiling, and I'll ask you right now, do you think the dollar breaks 105 this week? Comment yes or no. I'm tracking consensus. That answer will tell you a lot about gold's path. We are now at the setup section. Most people skip this part. That's exactly where the money is made. Keep watching. I'll hand you 3 trades with exact price levels, stops, and targets, all engineered for today's volatility. Strategy 1, the opening scalp. This is a high probability short right at the first resistance bounce. The level is 40.33. That's former support 2, now acting as resistance. If price rallies to 4,033 and prints a bearish engulfing candle on the 5-minute chart, you sell. The exact trigger, a 5-minute candle that opens above 4,033, pushes slightly higher, and then closes back below 40.33. Your stop loss goes at 40.47, just above support 1 turned resistance. That's 14 points of risk. Take profit 1 is at 4,015, just above the 4,014 cliff. That's 18 points of reward, giving a 1.3 risk-reward scalp. If momentum is fast, you can set a TP2 at 4,001, a 32-point run. What instantly voids the scalp? If the 5-minute candle closes above 40.47, then the structure flips and the short is off. This scalp exploits the fact that trapped longs from yesterday will try to exit on any pop, pushing price back down. Strategy 2, the liquidity grab. This is the counter-noise scalp that profits from stop hunts. In a bear trend, breakouts below key support often trigger a fakeout, trapping late shorts before a squeeze. But we are not buying the squeeze. We are shorting the failure of the fakeout. Here's the setup. If price pierces 40.14, the S3 and major psychological level, and then within 15 minutes snaps back above 40.14, that's a liquidity grab, stops were run, and momentum weakens. Wait for the snapback and a 5-minute close back above 40.14, then sell the retest of 4,014 from above, targeting the next intraday liquidity pool at 4,005. Entry on a bearish 5-minute candle after the reclaim fails. Stop loss just above the wick of the fakeout spike, but no more than 4,025. That's a tight stop of about 11 points. Take profit at 4,005, a 9-point scalp, but high win rate if the grab is real. Fast execution required. If the break below 4,014 holds and we see a 15-minute candle closing below 40.14, the liquidity grab is void and we are in freefall, so don't take the short, Instead, the swing trade takes over. Are you scalping or swinging this week? Comment scalp or swing. I want to see where this community sits. The algorithm loves that interaction, and I'll be in the comments. Strategy 3, the session swing. This is the trend-aligned hold. The daily and 4-hour strong sell trend is your wind. We are looking for a pullback entry into the broken structure. The key level is 4,047. That's S1 flip to resistance. If gold bounces to 4,047 and shows a clear bearish reversal pattern on the 4-hour chart, a shooting star, a bearish engulfing, or simply a rejection and a MACD histogram starting to roll over, you enter short. Stop loss sits above the daily structural resistance at 4081. That's 34 points of risk, which aligns with the daily volatility. Take profit 1 is 4,000, a major round number and psychological target. That's a 47-point move, giving a 1.4 risk reward. Take profit 2 stretches to 3950, the next weekly support, for a 97-point run, nearly 1 minute and 2.8 seconds. Once price reaches 4020, move your stop to break even. The invalidation level is a daily close above 4115. That would break the sequence of lower highs and force a full re-evaluation. This swing trade capitalizes on the bear trend's momentum and the fact that the 60 MA on the 4-hour is at 4,388, way overhead, so all rallies will be sold until proven otherwise. Let's pin those trade cards visually on screen so you can screenshot them. I'll show each card now. Strategy 1, the opening SCALP entry, 4033, 5M bearish engulfing after tap, stop loss, 4047 take profit 1, 4015 take profit 2, optional 4001 risk, air reward, 1 minute and 1.3 seconds, TP1, invalidation, 5M close above 4047. Strategy 2, the liquidity GRAB entry, 4014 retest after fake breakout snapback, 5M bearish candle, stop loss, 4025 take profit 1, 4005 risk, reward, 1:0.8 invalidation, 15M candle closed below 4014 with no reclaim. Strategy 3, the session SRNG entry, 4047, 4H bearish reversal candle, stop loss, 4081 take profit 1, 4000 take profit 2, 3950 risk, air reward, 1 minute and 2.8 seconds, TP2, invalidation, daily close above 4115. Risk management pulse, never risk more than 1 to 2% per trade. Scalps demand even tighter risk. No positions through high-impact news like an unscheduled FOMC statement or a sudden Iran de-escalation. Stops are non-negotiable. This is how you survive to trade the next big move, and the next big move is coming. The single most critical level for the next session is 4014. If this level breaks and holds on a daily close, the whole monthly trend flips from buy to neutral, and we accelerate towards 3950 and then 3800. Tomorrow's wildcard is the follow-up US PPI data and any Iranian retaliation headlines. If the producer inflation number comes hot, gold's freefall intensifies. If we get a de-escalation and yields dip, we could see a violent short squeeze to 4081. I'll have the updated blueprint 24 hours from now, with new levels and new scalps. If you want the full breakdown on Bitcoin and the S&P divergence, that video is live now. Tap the end screen. Then hit the bell so tomorrow's alert lands before the open. Hold the like button and subscribe. Every signal helps the algorithm bring you the levels that matter. This is not a game. This is volatility turning into profit. Scalp the noise, swing the trend.